Hello everyone, welcome to another trading video. My name is Khalil. Happy New Year. Just like we do really on all these videos, we're just gonna review this week, we're gonna review last week, talk about a little bit of the trades that we did take and ones that we should have and shouldn't have. And not only that, really we're gonna try to continue to stick to our plans. And speaking, this is the new year. We have to focus. We have to stay committed. Last year was last year. Let's keep the lessons, but leave the negative feelings and emotions behind. It's really time to focus on our craft and make sure that this year is better than last. So with that being said, I'll jump into the analysis. So just to go back to last week, last week was on a continuous bullish trend. You see that it was just beautiful higher highs, higher lows, more higher highs, more higher lows, breaks, quick consolidation, picking up highs, and you see it was very beautiful structure last week. So we know that it is a bullish bias. So since this week is Christmas week, there is no new news. So we could expect, one of two things to happen, right? It's either going to range or it's going to continue bullish. One of the two. And so it is good to take a lot of short trades this week, since volatility would be a little bit lower than normal given the holidays. So you want to keep that in mind with your trading plan for the week. So that's what we did. We did for the most part, but life is a lesson. So we kind of went against our trading plan, but this is all we'll talk about that, and that's all about the lessons and the learnings of last year. So going into it, we saw that I wasn't too eager to play this. We knew it was ranging, and it didn't create any significant structure here or anything. It was just kind of it was a little choppy, honestly, right? A lot of fake outs, a lot of all this other stuff. So I wasn't too worried about trading in the beginning of the week. We waited till later on. It's already Wednesday, and it's already Wednesday here. So we weren't really pressed. It wasn't giving us any significant signals, patterns, things like that. So we left it alone. So eventually it broke out of the 1 hour time frame, came down, shot down with this big bearish candle, and then it continued to show some shadow candles here. So this is a setup that I like to trade. We just trade a breakout, and we basically did this trade with two positions. So first trade was at the close of the breakout. Here is going to be our take profit, as you see, at a 200% of that, right? So the close of this candle, we took a trade. We took half a position just in case it was going to retrace. When it did retrace, we took this other. Let me go to the 5-minute really quickly. Okay, so in the 5-minute, we see that when it did retrace, we entered this trade here, and we both basically took profit. Now the market did continue to go a lot higher. And so we wasn't going to entertain any emotions relative to FOMO or anything like that. So we just left it alone, waited for our next signal, right? And what I did see was a nice pattern, nice consolidation here, and kind of just waited for it. I waited for it, but it looks like that it broke out of the structure here. Once it broke out of the structure, I did enter a trade. However, my trade was not was a little bit more than this. So before this is 17 pips. This one was 35. However, I did use the same lot volume. So that's a mistake on my part. Would have basically this trade canceled out this trade. Yeah, that's just how it played out. So lesson learned. We should have just halved our regular volume, and we'd have been still up by one trade. But it did retrace, come back, went inside the consolidation zone. So this is maybe like a fake out, and then it continued downwards. So once it continued downwards, I kind of understood that, and I was just waiting. So I did note here, this is the RSI divergence. You see here, you see that this is an uptrend. However, the RSI, the peaks in the RSI has been, going down. You see, and it signals for a reversal. So this is just secondary confirmation. What I was really looking for was on the 1 hour. You see that this is a hourly resistance that I placed here, and mainly I wanted to see a break on the hourly here, which it didn't. And I also have this 15-minute counter trend line. So this this 15-minute trend line, and we will basically wait for as confirmation of the rejection. We're going to wait until it broke the trend line. So as you see, this divergence broke the trend line, couldn't break on the hourly, although with this spike, it was safe to say that it was going to continue to trade downwards. And that's what it did, right? I'll take profit with a low here. They're in basic structure, you have highs, lows. So once it breaks this level here, this is now considered a strong resistance. Actually, give me 1 second. Let me explain that. So here, once it comes and it retraces and it rejects, the previous high is the strong resistance, and the previous low that you want it to break, since it's in a specific trend, is considered weak. And so because the market wants to break this, and so that's a good target for us most of the time in this scenario. So normally for these trend lines, I trade either two positions. I either trade 61.8 if it's a counter trend line, so I'm just in it short for a short amount of time and I'm out. But if it's if I'm trading a trend line, if I'm trading a trend line, it'll be 1%, yeah. And if it breaks a trend line, I'll be in it in a less amount of time, right? Because if it's going down, right, and it has this trend line here, right? If it breaks this trend line, maybe let's say on the next one, it still has this hard level support. So this trend line isn't something I want to. This breaking trend line is not something I want to regard as critical, and I want to be in this a short amount of time possible. But let's say if in this scenario right here, it's going down, up, down, and then it's creating lines there, and it breaks this counter trend line here. Well, if it breaks that, my target will be the low here, because that's essentially what I want. That's what it's supposed to do. So this is why I would trade at 100%. In this scenario, I would trade at 61.8% based on this trend line there. So that's what I would do. Usually the counter trend lines are pretty short, but yeah. So that's what I would do. I did not take this trade, but this is a trade that I should have taken. It was actually at 3 a.m. and I was simply asleep, so I woke up kind of frustrated. But yeah, so that was that trade. And then later in the week, we saw that we thought it was gonna be a head and shoulders. As you see here, looks a beautiful setup. I was waiting for it to break above. It's gonna take trades, put stop loss here, take profit at the 100% of from the neck to the head, and that was going to be my target. However, it did not do that from a 15-minute standpoint, and now I'm looking at it from the hourly, where it is sort of still making a head and shoulders. So this is something that I would trade and look at for the week. Also, you see this is one of my signals. You see that it is continuously just engulfing each other itself. So down, engulf. It usually shows a signal. So I probably will take this trade next. But that's for next week's video. Thank you for joining this video, and yeah, we'll see how this year goes. I'll be making a new video in next week to show essentially how I'm gonna go about this year. So thank you for tuning in.